Well, hello and good morning. Welcome to another Active Rain Real Estate Technology Flip Video Series. This morning in our mobile studio we have Mr. Jeff Dennis with Coldwell Banker. Jeff is also past president of the Solano Association of Realtors. Good morning, Jeff.
Good morning, Brad. Thank you for the opportunity to speak with you today.
Hey, let's talk about real estate. First of all, in short, Jeff, tell us a little bit about yourself and what you do.
February, I celebrated my 32nd year in the real estate business as a full-time salesperson. I've also been an owner of a real estate franchise. I currently act as assistant manager and trainer for Coldwell Banker Solano Pacific in Benicia. Been doing this for a long time, mostly residential resale, but I've done some commercial and investment properties as well.
Wonderful. Let me ask you this. Can you tell our viewers what your perspective is or what you feel where the real estate market is right now?
Well, currently we're experiencing a large inventory. We've had a lot of bank foreclosures, bank-owned REO properties that are currently driving the market in a lot of ways. The pricing that banks put on their property is designed to get the property sold, and consequently that has affected the pricing structure that we're dealing with currently. We just had in California significant decrease in the average and median price of homes, primarily because the lower end is finally starting to move. For a long time it didn't sell, and we were buoyed up by the upper end actually continuing to sell, and that buoyed up the average and median prices. But currently we're seeing a lot more of the REO properties that are selling, and that's at a lower range, and it's consequently dropped that median price. So while now significantly the prices have obviously come down over time, the thing that we looked at was that median price, and until that bottom end started to move, we weren't seeing that adjustment. But if you look at the price of an average home, that certainly has come down into a more affordable range now. So putting the positive look on that, now a house that's is affordable that you couldn't have bought 2 years ago, houses that were over $1 million are now selling in the high 100,000 range.
Right.
We're looking at something was on the market right now at closing at 440 that was close to $1 million. So a house that you couldn't have afforded 2 years ago is now in the affordable range, and this is a great opportunity.
You had mentioned earlier as we were talking that there was a high and a low, and that there was a peak of the market and the bottom of the market. And
right.
Can you share that a little bit?
Well, all the experts that I've talked to have identified somewhere in the last beginning of the last quarter of 2005 was the peak of the market. In talking, it was at a Inman conference, and Alex Perillo mentioned that August of 2005 was kind of the date that they had looked at, and I've heard somebody else that said September, and I've declared October 5th, 2005 as being the peak of the real estate market. Again, I probably made that date up, but the idea was that at some point we hit a peak. Part of what we're dealing with right now is some uncertainty on a buyer's perspective of where the bottom is. If I buy a home now, and is it going to go down in value? And the truth is, nobody knows that. And the truth is, the only way I can say that October 5th was the peak is because I can look back in hindsight.
Right.
So the only way that you ever know where the bottom is until you've come out of it and you're already on the way up. So I have decided that in keeping with the April Fool's tradition, April 1st, 2008, I'm declaring as the bottom of the real estate market. Now I know that the truth is we're probably bouncing on the bottom, and we have been for a while. We're still seeing REOs, notice of defaults, come into the marketplace, and they can continue to be a driving force in the marketplace.
Right.
But again, we're seeing those houses starting to move. Investors are coming back in the marketplace. We're starting to see the people that are going to build wealth in this marketplace take advantage of those things.
Well, let me ask you. So, in your opinion, for our viewers that are watching, that may be buyers, sellers, or even investors, is now the time to invest or buy real estate?
Well, you could wait, and again, that's a strategy that for some people has worked. I have to tell you though, I haven't seen interest rates as low as they are right now. We are in the high 5s, low 6s. That's traditionally, if you look back over a period of time, and real estate is a long-term investment, you have to realize that over time, those are traditionally great interest rates. So if you wait, the chances are that those rates are going to go up. If they're going to go down, what are they going to go down to? Zero? So again, you could wait. You could wait for prices to soften a little more, which they may in fact do. But the truth is, you know right now that you're not competing with a whole lot of other offers, though we're starting to see a little of that. You're also be able to find a house that you really, really like. There's a huge inventory out there now, and securing a long-term 30-year fixed rate loan that will be paid off in that period of time. Here's what I do know, is that if you get a 30-year loan on a property, and if property values never go up, in fact go down, at the end of that term, you own the house.
Right.
You can't do that with rent. If you're thinking, gee, I'll rent for a little longer, you don't have any tax deductions. You're getting no benefit from that. You're building equity for the owner of the property, and so you could continue to wait and rent and throw money down the rat hole, or you could make the investment on a long-term basis. People who lost in this marketplace were all short-term gamblers, not real estate investors. Anybody who bought and held on to the property, you look at what happened in the mid-'90s, who bought in the early '90s and had to sell in the mid-'90s. Some people lost money, but if they held on, were able to ride that out and made it to 2000 or even 2003 or October 5th, 2005, they did just fine. So that's my so my answer to that is don't wait.
Okay.
It doesn't make sense.
And I think because it is unpredictable that rates could go up, prices could go down. Everything is pretty unpredictable. But now for the price that people are paying in rent, they could possibly own a home for even less.
Yep.
Well, Jeff, I want to thank you. That wraps up another Active Rain Real Estate Technology Flip Video Series. I want to thank you for letting me interview you, and appreciate your time today. And so till next time, signing off. Have a great day.
Thanks, Brad.
Thank you.